Hi traders, and welcome to this Pepperstone presentation on automated trading strategies and how they can assist traders building robust and reliable trade plans that can run without human intervention. In this presentation, we will learn what an automated trading system is and how it can help traders. We will learn how to build an automated trading system that meets your trading goals. We will look at backtesting and why it is an important part of automated trading. And we will look at what optimization is and some of the advantages and disadvantages. So what is automated trading? Also known as algorithmic trading or black box trading, it involves the use of computer programs and algorithms to execute predefined trading strategies in financial markets. It operates on a set of predefined rules and conditions to automatically initiate and manage trade orders without human intervention. These algorithms are designed to analyze market data, such as price movements, volume, and other relevant indicators to make rapid decisions on buying, selling, or holding financial instruments like stocks, currencies, commodities, or CFDs. They can execute trades at speed and frequencies far beyond what a human trader can achieve, reacting to market changes in milliseconds. Automated trading systems can employ various strategies, including trend following, sideways moving markets, and statistical analysis, and more complex mathematical models. These systems can mitigate emotional trading biases and enable swift reactions to market opportunities, minimizing human errors and responding to market conditions based on set parameters. Let's first look at building an automated system. Building an automated system involves several key steps. Firstly, you have to define a strategy. We can begin by specifying a clear trading strategy based on technical and fundamental analysis. You need to decide on an entry and exit criteria, risk management rules, and asset selection. This includes implementing risk controls, such as stop-loss orders and position sizing rules to protect your capital and limit losses. Then we need to focus on data collection. You can gather the historical and real-time market data relevant to your strategy, including price, volume, and other indicators, using APIs and data providers, and these can all be very valuable resources. Most of this data will be built into the chosen Pepperstone platform. Next, you're going to look at paper trading as part of the building process. Test a system in a simulated environment before deploying real capital to minimize the risks. Then you need to focus on algorithm development, creating a trading algorithm that executes the buy and sell orders according to your defined strategy. Most of the platforms that Pepperstone provide users have this functionality built in, and these include TradingView and the popular MT5. Next, we need to focus on execution and connecting the algorithm to the broker's trading platform using APIs, ensuring that it can increase, place, and manage orders automatically. Next, we can look at deployment. Once there is confidence in the performance of the system, you can deploy the system with real capital while continuing to monitor and refine it. The final step of the building process is monitoring and maintenance, continuously monitoring and maintaining the system's performance and making adjustments as needed to adapt to the changing market conditions. The next important concept of automated trading is backtesting. Trading backtesting is a crucial process in the financial industry used to evaluate the effectiveness of a trade strategy before deploying it in the real market. It involves analysing historical market data to simulate how a specific trading strategy would have performed in the past. The process typically begins by selecting a set of trading rules, such as entry and exit criteria, risk management, parameters, and position sizing. These rules are then applied to historical price and volume data to simulate the strategy's performance over a defined period. This simulation helps traders and investors assess the strategy's profitability, risk, and other key performance metrics. Backtesting allows traders to fine-tune and optimize their strategies, identify potential flaws, and gain confidence in their approach. However, it is important to use a diverse and representative dataset to ensure that the strategy's robustness and avoid overfitting, where a strategy works well only on historical data but fails in real-world conditions. Regularly updating and retesting strategies is also essential to adapt to changing market conditions. Next, we move on to optimizing a strategy. Optimizing a trading strategy involves refining a set of rules and parameters to maximize potential profit while minimizing risk. The process typically begins with data analysis, where historical market data is analyzed to identify patterns and trends. Traders then choose a suitable trading strategy, such as a trend-following system, mean reversion, or momentum trading, based on their objectives and market conditions. Once a strategy is chosen, traders experiment with various parameters, like entry and exit points, stop-loss levels, and position sizing. Backtesting software is often used to assess the strategy's historical performance and refine its base of past data. These can be found in Pepperstone's suite of trading platforms, including TradingView and MT5. Risk management is a critical aspect of optimization. Traders determine the appropriate position sizes and leverage to control risk and avoid catastrophic losses. They also set risk-reward ratios to ensure the potential gains outweigh the potential losses. Continuous monitoring and adjustments are essential. Traders track real-time market conditions and make necessary tweaks to adapt to changing dynamics. Optimization is an ongoing process, as markets are dynamic and strategies must evolve to remain effective. Successful optimization requires discipline, patience, and a robust understanding of financial markets. It's important to keep emotions in check and stick to a well-defined plan to achieve consistent results in trading. In this lesson, we've learned what automated trading systems are and how they can help traders. We learned how to build an automated trading system that meets your trading goals. We talked about backtesting and why it is so important to be part of any automated trading plan. And we talked about optimization and the ins and outs of what optimization is and how it needs to be managed as part of any automated trade planning system.